going to get hit very, very hard by this. The middle classes will find that their wealth is wiped out. Quite a lot of the wealthy people will also really suffer, though generally there is a sweet spot for them, and that is, the really wealthy. They manage to find ways out of this, one way or the other. But there will come a point where I think even they're going to have a problem. And because this is going to be everywhere, and I'm not just talking America, I'm talking about the euro, I'm talking about the yen, I'm talking about sterling, even the Swiss franc. There's going to be no hiding from this. You can't just sort of get out into a firm currency or, a proper gold substitute, because where's the gold substitute? I mean, it's only going to be for trade purposes, perhaps, for if you're Russian, Chinese, or in BRICS. I say get out of credit and get into gold, which is real money, real legal money since Roman times, and it still is, despite the propaganda of governments who sell it and say it's no more than a pet rock.
In today's news recap, why silver investors should pay close attention to copper. For most investors, gold and silver are inseparable, like peanut butter and jelly or two peas in a pod. This mindset leads them to look at gold for signals on silver's future price movements and vice versa. Although silver's price is indeed strongly influenced by gold, few realize the significant role that copper also plays in shaping silver's price movements. To understand the price relationship between two assets, examining their correlations can be highly insightful. Not surprisingly, gold and silver exhibit a strong correlation. What's particularly striking, however, is the strong correlation between copper and silver. The strong price relationship between silver and copper is clearly reflected in long-term charts of the silver to copper ratio, which has remained remarkably consistent over time, despite periodic fluctuations around the average of 6. The close relationship between silver and copper can be attributed to factors influencing both supply and demand. From a supply standpoint, silver is seldom mined on its own. Instead, it is typically a byproduct of copper and other metal mining such as lead, zinc, and gold. On the demand side, both silver and copper have substantial industrial applications, driving significant industrial demand for both metals. While silver is often grouped with gold, it differs significantly in its demand profile. The majority of silver demand comes from industrial use compared to just from investment. Furthermore, the rapid growth in industrial demand for silver likely explains the rising correlation between silver and copper in recent years. In contrast, gold demand is largely fueled by investment and jewelry, with much of that jewelry also serving as a form of investment, especially in developing countries like India and China. Both copper and silver are far more sensitive to the economic cycle compared to gold. For instance, when a recession looms, both copper and silver prices tend to decline in anticipation of reduced industrial demand. Conversely, when the economic cycle is on an upswing, both copper and silver prices typically rise in anticipation of increased industrial demand. Gold, by contrast, is traditionally viewed as a safe haven asset that investors turn to during times of crisis. Now we'll show you the best clips of the latest interview, but first smash the subscribe button, turn on notifications, and share this video with a stacker. Enjoy the episode.
Fiat currency collapse are that really what we're talking about is a loss of purchasing power for the fiat currencies. Now, that means that the purchasing power of your dollar goes down. The way in which this usually works, or has worked in the past, and I see no reason why it shouldn't be different now, is that the run on the currency starts with foreign owners bailing out. And so we are already seeing, as I said earlier, we're already seeing China and Japan turning net sellers of US treasuries and net sellers of the dollar. And that is something that is likely to increase. The fact, as I said, that central banks around the world are selling fiat currencies, particularly the dollar, which is, the king rat of fiat currencies, in return for real money, which is gold, also confirms this trend that the foreigners basically are getting rid of dollars and going into real money. There will come a point where there is a wider awakening of the problems which are leading to a collapse in the purchasing power of the dollar. We saw a start of this with the Fed cutting interest rates by 50 basis points, in September, when 25 basis points was expected. Now, what's called point difference between friends? It's not that material, but in terms of indicating the way the Fed policy is going, it was a very, very strong suggestion that the dilemma that the Fed faces in terms of high interest rates killing the economy or a weaker dollar, they've chosen the weaker dollar route. So again, the foreigners know that this fiat currency's purchasing power is going down. Then we have the problem of how does the US government fund its deficit? I mean, that's already run up to 35.6 trillion or something. You have got the debt limit being reset on the 2nd and 3rd of January, which is after the presidential election and just before the new president takes office, I think, because they take office on the 6th of January or thereabouts. So, if I was Kamala Harris or if I was Donald Trump, I would want to get that ceiling raised as much as possible to give me room to spend, or room, if you like, to sort the economy, or however you like to put it. So how about 40 trillion? And, we could get there quite quickly. So all this is feeding into a crisis for the dollar. Now, when the dollar's purchasing power goes down, interest rates rise, which means that banks and businesses start going bust. The cost of funding, of US Treasury funding, rises materially. And guess what? They're then definitely in a debt trap. So how do they manage this? Well, they've got to rescue the whole caboodle, which basically means they've got to devalue the currency by printing currency to replace contracting back credit. I mean, I'm not quite sure how this is really going to play out, but you can see that this is a situation for which there is no easy solution. And there will come a time when the average American begins to realize that it's not prices going up, but it's the purchasing power of the dollar going down. Now, the great Austrian economist Ludwig von Mises opined that when the users of a currency finally realize that it's the currency going down, then it's at it. That's the end of it. And so the only question remaining is how quickly could this happen? Well, I think it probably depends to an extent on what comes out of Kazan. I mean, if the Russians and the Chinese do back their own currencies, for limited purposes, perhaps initially, like, cross-border trade settlement in the Shanghai Cooperation Organization and BRICS, then that could accelerate the decline in the dollar very, very quickly. And once it starts going, the question will be asked increasingly, what's your faith in the US government's management of the dollar?
In today's news recap, silver is in a hidden global bull market. Silver has been lagging behind gold significantly, creating uncertainty for investors looking for opportunities in precious metals. Interestingly, silver has been setting new all-time highs in several global currencies, highlighting investor interest around the globe. Whether this is related to the alleged silver suppression, currency divergences, or anything else is completely out of scope of our work. It may even be completely irrelevant to investors. What truly matters is that silver has printing a series of fresh all-time highs in currencies like the Indian rupee, Australian dollar. Moreover, In other global currencies like the Canadian dollar and euro, silver is inches away from hitting new ATH. It becomes clear that the global investor interest in silver is very strong, much stronger than the silver in USD story makes us believe. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Silver is a monetary metal, but it's not valued as such. It's valued on industrial grounds, and that value, I have to say, is somewhat suppressed. It has been in supply deficit, according to the Silver Institute, for the last 4 years, which is a crazy situation. I think just purely on commercial fundamentals, I would see silver going quite a lot higher anyway. As gold gets more and more in the forefront of replacing credit, if you like, in people's ideas of value, how do we protect ourselves? Then silver is going to rise even quicker. Bear in mind, silver relative to gold has been in a long-term bear market. I mean, Diocletian's edict of maximum prices put the ratio at 12. If you look at what Sir Isaac Newton was saying, he was saying I think something like 14.5 or 15.5. The big slide really was in about 1870 when Germany, in the wake of the Franco-Prussian War, actually it was a bit later than 70, it was probably about 74, 75, came off the silver standard, having got gold reparations out of France. So they went on to a gold standard. And from that point, really, there was virtually nobody on a silver standard in Europe. And the price fell because it was no longer reflecting its moneyness, if you like. It wasn't a standard except for small amounts. In this country, it's legal tender for 40 shillings, which is £2. But any more than that, it's not legal tender. So this is the sort of problem that silver has faced. The current level of the relationship between gold and silver is a ratio of around about 83, 84 as we speak. That, in my mind, is absolutely crazy. It is far too high, given the circumstances that we're seeing of the early stages of a collapse of fiat currencies. It is purely mispriced. And I was interested to see that about 4 or 5 days ago, the Russians passed some sort of regulation for their wealth funds that they were going to go out and buy silver. Why is that? I mean, you could be a conspiracy theorist and say they want to bankrupt the Western bullion banking system. But let's assume that's not true. They're buying silver because they see it as an extremely precious metal, and they see it as something which is wildly undervalued relative to gold. So, and I think it's probably an indication of where Russian policy is going on gold, rather than anything necessarily about silver. I mean, Russia is vying for the second largest output by gold mine of gold, vying that position with Australia, China being number one. So she's already got all the gold she needs, and it seems to me it makes an awful lot of sense for her to wander in and start buying silver. Apart from anything else, it is an extremely useful material for industrial purposes, and I don't see that changing. Even if silver runs up to $100 an ounce, I don't see if you like, the qualities of silver being matched by anything else in terms of its applications. So where does it stop? This is bid only to me. It's quite simple. And incidentally, the point I was making in my article about silver is that it's not, it's by no means overbought or anything like that. There are no extreme positions in the futures market. But we do have a situation whereby the swaps, if you like, the bullion bank trading desks are short, and they are being squeezed. And some of these banks are also being squeezed in the gold market, in the gold futures market. So there is the potential for the derivatives markets, if you like, in precious metals to seize up. And that would be catastrophic for us, I must say.
What do you think of Alasdair's interview? Do you agree with him? Are BRICS nation going to destroy the US dollar and the American economy? Will gold rise to $5,000 in 2025? Post in the comments section your honest opinion and share with the stackers if you also hold miners in your portfolio, or if on the contrary, you stick with the metals themselves. Thanks for watching. Now check this video right here because you'll like it. I'll see you on the other side.